What happens when someone dies with a reverse mortgage? Hey guys, it's Brad from probateresource.com. So at Probate Resource, we're a real estate solutions company specializing in the world of probate and inheritance properties. We buy properties for cash all over the U.S., and we also have a hand-picked network of probate and inheritance real estate agent specialists that we work with all across the country to help you get your property sold. So today I want to talk about when someone dies with a reverse mortgage. We see this quite frequently, actually. And what is a reverse mortgage? Some people don't know what that is, so I'm going to just briefly go into that. Basically what that means is it's intended to sort of be the last mortgage that anyone has on a house. So let's say mom and dad own a house and they have a ton of equity in it. They don't necessarily have to have the house paid for, but they typically have a ton of equity. And what they could basically do is go get a reverse mortgage. In most cases, this is sponsored by FHA or HUD, the Housing and Urban Development Group. It's an FHA loan. And basically, which means it's government backed. Basically, let's say that they own a house that's worth like $600,000 and mom and dad want $400,000. Maybe they want it all up front, or they want to take it sort of over time as income, let's call it, right? Well, they can go get a reverse mortgage on this house that maybe they have a lot of equity in, and basically borrow this money, and there are no payments due on this mortgage. They can pay it if they like, but there are no payments due during the term, and they can either choose to take all the money up front. Let's say they're borrowing $400,000, right? They can take all $400,000 up front at the beginning in a big lump sum, or they can choose to take amount over time. And gradually over time, the interest accrues and it just adds to the balance of the loan. So as time passes, maybe the first month it's $401,000 and then $402,000, right? Over time, it continues to accrue on the loan. And then eventually, when either they pass away or they decide to sell the property, that mortgage would be due, or they would need to pay that mortgage off, in which case the bank's going to get their money back. And because there is equity in the property and they can sell the property for more money than the note is due, typically it's okay. Now, we have seen scenarios where they took out a reverse mortgage maybe at a certain time, and maybe they're in a certain area where their values have declined. I've seen that from time to time. Not as common now, because in the last couple of years, property values have rapidly appreciated, but they take out a mortgage, and then eventually they basically have to repay that mortgage back to the bank. Now, what happens when someone dies with a reverse mortgage? Well, it depends on how many borrowers were on the loan. If there was only one borrower on the loan, and someone dies with that reverse mortgage, then typically the bank is going to be notified that that person passed away. Most of the time, the executor is going to notify the bank, but they have other means and ways of finding if the person is deceased, and in which case the heirs have a certain period of time to either sell the property, or if the heirs decide to keep the property, they would need to pay off this mortgage, right? So maybe they're going to go get Brother Johnny wants to buy the house from mom and dad's estate. So Brother Johnny buys the house from mom and dad's estate. Brother Johnny goes and gets his own mortgage, buys the house from the estate for fair market value, or even maybe he buys it for less than fair market value because he gets a family discount. But it's enough to satisfy the mortgage, and the mortgage gets paid off and the bank's gone and everybody's happy, right? But the family still gets to keep the house, right? Either way, upon the death of the borrower on the mortgage, that mortgage has a certain period of time where it needs to be paid back. The clock starts ticking at that point. Now, you need to check with look at the note or look at the mortgage paperwork, and it'll typically tell you exactly what that time period is. A lot of people say 12 months, but it's not necessarily always 12 months in every single case. So you need to look at your paperwork, go find the paperwork, read it, and understand it, and that will tell you. Also, in mortgage companies, they don't really want to foreclose on properties. It's an arduous process for them. It requires a lot of paperwork and headaches. And if you're maybe stuck in the middle of probate and you've got a probate that's dragging out for a certain period of time, you can apply for extensions on that repayment period. But again, look at your paperwork, because your lender might limit the amount of extensions that you can request, in which case there might be a time where it does come due. Now, don't freak out here also, because Because reverse mortgages in most cases are what's called a non-recourse loan, that means that if for some reason this loan defaults, the heirs are not responsible for this debt. They're not personally going to come after you as an heir for the debt of the property. What non-recourse means, there's no legal recourse for the lender to go after anyone else for satisfying the debt. So if, for instance, this house sells at auction for $150,000 and there was $175,000 owed on the mortgage, the bank cannot come after you for the $25,000 difference if it's a non-recourse loan. They just have to wipe it off their books. Now, if there was recourse debt, depending on the state you live in and your state's laws, and you should consult an attorney about this, they can come after you with what's called a deficiency judgment. That was very common back after the real estate crash, where people would get deficiency notices from the bank, where basically their house sold at auction for $100, they owed the bank $150, and the bank came after them with a $50,000 deficiency judgment and said, hey, you still owe us another $50,000 because we sold the house and it didn't satisfy the debt, right? In cases of a non-recourse loan, that's not applicable. They can't go after anyone. They just, basically the collateral is the real estate asset, and that's that. There's no personal guarantee, nothing like that on a non-recourse loan. So make sure you're paying attention to your paperwork in terms of the amount of time period you have. And like I said, the family can choose to keep the property, but you just have to make sure that mortgage gets paid off. From the bank's perspective, the note holder of the reverse mortgage, they literally they want their money back. So as long as you can pay them off, then they're happy. Now, in most cases, we deal with families who ultimately are selling the property. They don't plan on keeping it, in which case that mortgage balance would get satisfied at closing. And also, if you're kind of already far enough down the path and you're running out of time and the property is getting foreclosed on, check with your state laws, because even though it gets foreclosed on, the estate in many cases is still entitled to the equity over and above what is owed on the property. And again, this is different from state to state, so you need to consult an attorney to figure out if your specific situation applies here. But in many cases it does, where let's say there's $100,000 owed on this reverse mortgage, and the house sells at auction for $300,000 at auction, right? The $200,000 difference between what was owed on the mortgage and what it actually sold for at auction can actually be reclaimed by the estate. There's just a little bit of paperwork you have to fill out. You'd have to go to the attorney's office who handles the foreclosure in your specific state. And basically you can request that, they call it excess funds. You can actually request those excess funds back because the bank is only entitled to what is owed on the property, on the note. That's all, plus penalties, interest, whatever. That's all they can legally claim. They can't claim all of the equity in the house. But again, that's different from state to state. So don't take what I say as gospel for everything, because your specific scenario might be a little bit different. So you should consult an attorney. By the way, if you need a referral to an attorney, we work with real estate attorneys and probate attorneys and all of the above all across the country. So if you need a referral to one, we'd be happy to refer you to one of the firms that we work with on a regular basis in your specific area that can answer your specific question and solve your specific problem. So I hope this helps answer your questions a little bit about what happens when someone dies with a reverse mortgage. You do have a decent period of time. So don't freak out and say, oh my gosh, they're going to take the house back tomorrow or next month or whatever. Generally, you have a pretty decent leeway to be able to sell the property, get the affairs in order, go through the probate process, but don't hesitate to do that. Don't procrastinate and wait till the last minute, because we have had families reach out to us and they're like, hey, the house is selling at auction on Tuesday. What do we do? So thanks again for checking out this video. I'm Brad with probateresource.com. Like I said, we're a real estate solutions company. We pay cash for houses, or we have a hand-picked network of real estate agents that we work with throughout the country. We'd be happy to help you out with your specific situation. Thanks again for your watching this video today. I hope you have a great day. Bye-bye.